I started investment with few dollars and with a lot of confusion. Now I share everything, whatever I have learned, so you don't have to make the same mistake. Hi everyone, my name is Ricky and welcome to Peaceful Investor. This channel is about simplifying investing and achieving financial freedom. Before we start, I'm not a financial advisor. Please do your own due diligence before investing, and this content is only for educational purpose. With Peaceful Investor, you will find stock analysis, daily market traps, and a weekly market review. I explain company business models, highlight their financials, and share market insights so that viewers can better understand how business and the economy connect. I post daily market wrap updates that shows how the market performed, the key news, and what's coming up next. These updates can give you a picture of how the economy is performing in the short term and how different sectors are reacting. Every week, I post a weekly wrap up video. This brings together the big market moves, earning reports, and the economic data. It helps create a bigger picture of where the economy might be heading, which can give context to how different sectors and stocks behave. The main purpose of this channel is to give value to my viewers and subscribers. For me, subscribers are not just numbers. I want to build a long term relationship, not just for a few months or years, but for the long run. That is why I keep improving my content and services, and the only way I can do it with your support through liking, subscribing, and sharing. Okay, so that was a quick intro. Now let's talk about investing. There are two ways you can approach. First, invest in the large cap companies, which has a established track record and you can compound your money steadily. The other way is investing in the small cap companies. They just begin their journey and which has a potential to be a multi-bagger if they execute well. So today we are going to talk about a small cap company which was listed in 2021. Before I reveal the name, let's watch this clip.
Nothing builds confidence like making bold moves that work every time. We are Zeta, the first AI-powered marketing platform built by marketers for marketers, and the only place where identity, intelligence, and activation are fully integrated into a single comprehensive system. Flexible enough to wrap around your existing tech stack, precise enough to personalize every experience, and smart enough to supercharge your results. Zeta parses trillions of consumer signals to develop next-level intelligence that helps you predict where your audience is going before they get there. Empowering marketers to know more, do more, and win more. And accelerating brand growth in every way possible. Work confidently, execute with conviction, and discover the power of certainty with Zeta.
Hope you like this video clip. So today I am going to talk about a company called Zeta Global, a fast-growing marketing technology and AI company. Zeta runs the Zeta marketing platform, which is built to help big brands acquire new customers, grow existing relationship, and retain them for the long term. They use artificial intelligence and their huge data asset to deliver personalized campaigns across email, mobile, social media, connected TV, and more. In simple terms, Zeta makes money in two ways: software subscription for the access of its marketing platform, and usage and advertising fees whenever company runs their campaign through Zeta channels. So every time a brand uses Zeta system to reach customers more efficiently, that's revenue for Zeta. Let's break down their latest quarterly Q2 2025 earnings. Zeta reported 308 million in revenue, which is a 35% increase compared to last year. Adjusted EBITDA, a measure of operating profitability, came in 59 million, up massively 52% year over year. Free cash flow also jumped, hitting 34 million this quarter, which is 69% higher than last year. Importantly, Zeta has now delivered 14 consecutive quarters of more than 20% revenue growth and 18 straight quarters of expanding profit margins. That shows incredible consistency. Now, what should investors take away from this? High revenue growth shows Zeta is not just keeping customers but winning new ones and expanding wallet share. Strong margins means business is scaling, they are earning more profit from every dollar of sales. And rising free cash flow is critical because, unlike accounting earnings, cash flow is real money. It proves the business can fund its own growth without constantly relying on outside financing. Why does that matter? Companies with strong cash generation often reinvest into technology and AI to stay ahead of competitors, reduce debt and strengthen the balance sheet, or in the future return capital to shareholders through buybacks or dividends. When you combine rapid growth with expanding profitability and real free cash flow, you get a powerful investment story. That is why Zeta momentum in Q2 is so important. It shows the business model is not only growing but maturing into a cash generation machine. Now let's look ahead at where Zeta is going both in near term and long term. For the full year 2025, Zeta has raised its guidance after delivering a strong first half. Management now expects revenue of about 1.26 billion, which would be 26% increase year over year. Adjusted EBITDA of around 265 million, up 37% from year last year, and free cash flow of about 142 million, which is a 54% jump compared to last year. So in short term, Zeta is guiding for strong double digit growth across revenue, profit and cash generation, showing confidence that momentum continues. But what really excites investor is long term plan. By 2028, company is targeting revenue of 2.1 billion or more, adjusted EBITDA of at least 525 million, which would be 25% profit margin, and free cash flow of 340 million or more, which is about a 16% cash flow margin. This implies around 20% annual revenue growth between now and 2028, with cash flow and profitability growing even faster. For investors, here is what that means. The 2025 outlook proves that Zeta model is delivering right now, revenue climbing, margins are expanding and cash flowing is accelerating. In 2028 shows companies ambition to scale into much bigger and more profitable and cash generating business in next few years. Here is something important for investor. Back in 2022, Zeta set its first long-term model targeting 2025. At that time, many thought those numbers were aggressive, but fast forward today, Zeta has already exceeded several of those early targets, delivering faster revenue growth, higher average revenue per user expansion, and stronger free cash flow conversion than originally expected. That track record shows management effectiveness. They don't just set bold goals, they actually execute and then raise the bar higher. In Q2, Zeta scaled customer count, those spending over $100,000 a year, grew to 567, which is 21% higher than last year. Even more impressive, the number of super scaled customers, those spending over 1 million annually, rose to 168, up 17% year over year. This isn't just more clients, it's bigger clients. On average, scaled customers now spend $532,000 each, which is an 11% increase from last year. Superscale customers spend over 1.6 million on average, about 15 times more than smaller accounts. And the longer customer stays with Zeta, more they spend. 3+ year clients average over 2.6 million in annual revenue. So that shows a clear pattern. Customer loyalty drives bigger wallet share over time. But it's not all perfect. One red flag I found for investors that has stock based compensation. In 2024, stock based compensation was nearly $195 million, dollars, which was about 19% of revenue. This is something that you don't like it as an investor to see that your size is getting diluted. High stock based compensation can dilute shareholders if not managed carefully. The good news is management is actively addressing this issue. They have said stock based compensation is expected to decline as both a dollar amount and as a percentage of revenue. Dilution from equity grants should drop from 15% in 2024 to about 3 to 4% by 2026. In other words, they are tightening up compensation practices and aiming to reduce the impact on shareholders over time. So while stock-based compensation is still a watch out, Zeta's management is clearly aware of it and has put a plan to play steadily bring it down. So Zeta is growing its client base, getting more revenue from each customers and tackling shareholder dilution head on. Finally, let's look at Zeta's valuation. Right now, Zeta trades at about $19.55 per share, giving it a market cap of roughly 4.65 billion. On the valuation side, the price to cash flow is 25.65 and price to sale is 3.44. So revenue is growing at 30% year over year, and free cash flow is surging almost 70% in Q2 alone, and the profit margin is expanding every quarter, showing the Zeta's model is scaling efficiently, and the management has a proven track record. Considering everything, I feel this stock is undervalued. The real value of this stock, according to my valuation, is about $22. And personally, I started buying on this price, and I will keep an eye on this company for long term. And as it provides better financials in future, I will keep adding into my share. And that was it for today. I bought it. It doesn't mean you have to buy as well. You can do your own due diligence, and hope you like today's video. And thank you so much for your time.